Hello, traders. It's 8 a.m. Chicago time on November 1st. It is Monday, episode number 2106. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopping right into um, the convergent trading pre-market summary sheet. We see that we have a mild risk on sentiment. You can see the markets a little bit on the green side, anywhere between 18 basis points, which is the Nasdaq. It is the weakest of the bunch. The Nasdaq has a nice big M formation in the overnight session. Appears to be tackling that, and also has a legit overnight double bottom at 15,858. With strength coming in from the German DAX. This is a significant week this week. There's quite a bit going on, but so far we're gapping up in the S&P minis. Crude is seeing a push higher. Crude pushing towards $85. It's at its high of the session right now at 84.60, up 121 basis points, up $1.06. Gold still sideways. Gold's been married to this 1820 to 1750 range for quite some time. Silver, the same kind of going sideways. And then the bonds, the 10 years in the U.S. as well as the Bund are slightly off today, as again we would expect with a mild risk on sentiment. So overall, we're looking like a market is in good spirits. What could be driving this? What's on deck? Good earnings last week. The last of the majors was on Friday. And then we're looking at strong sentiment from last week. We're looking at solid PMI numbers. Chicago PMI came out last week. And then U.S. legislation looks like to be front and center. So overall, we're heading into this Christmas with a nice little rally. Maybe it'll make up for the fact that a lot of people won't be able to get their gifts due to logistics and whatnot. I'm just kidding. What are we looking at in terms of economic news? The biggest thing for this week, of course, I mean, we do get the Reserve Bank of Australia's interest rate decision this evening, but on Wednesday at 2 p.m. Eastern, we're looking at the Fed interest rate decision. This is going to be really front and center. We do know what to expect from the Fed. They've been very explicit about it, but still the market is likely to respond and continue to be tempered until that happens. The press conference on Wednesday at 2:30 p.m. Eastern. We do have the Bank of England interest rate decision on Thursday as well. That's at 8 a.m. Eastern. And then the non-farm payrolls Friday. So pretty significant week in terms of economic releases. Today, what we've had so far is retail sales from Germany came in a lot weaker than expected. And then we have market manufacturing PMI at 945, ISM manufacturing PMI at 10 in the U.S. Construction spending month on month at 10 as well. And then the meeting minutes out of the Bank of Japan at 750. And then the RBA interest rate decision again at 1130. So that's where we stand there. Notice the rotations. This is your rotation table right here. The range, this is the first standard deviation of daily range going back 252 days. Some of you might think, well, 252 days, man, that's a year's worth of trading. It is a year's worth of trading, but if we go to the last month, then that's just 20 days, and that's a very low confidence sample size. So we go for 252 to have a high enough sample size to have a statistically significant or a higher confidence interval in terms of what the first standard deviation is. So for the ES, 46 points is about what we can expect as normal, is what's inside of normal in the S&P. And 6-point rotations, these have dropped significantly. We're back down into 6 points. We still have some volatility, but the overall rotations have been dropping across the board. The only product that has not had rotations drop is crude oil. So these numbers are quite significant. They help us decide on stops. The rotations are based on 20 sessions, that's a month, of 1 minute bar rotations. We look at the swing high and the swing low. We put those on a histogram and we figure out what is the first standard deviation, and that gives you 6 points. In other words, a 6-point move in the S&P is considered normal or inside of what we would expect. In other words, part of the noise. So stops need to be wider and you need to be more accurate given the rotations. That's what this means. For the Nasdaq, 23.5 points. That's a lot, but it is what it is. That's what the stats show. In terms of key earnings, PG&E and CNA announced McKesson after the close, Simon Property Group also after the close. And then now, well, let's move into the ES. The ES has a multi-distribution overnight profile, really an active price discovery profile overnight. 170,000 contracts have traded. The overnight inventory is 100% long. We gapped up on the open on Sunday night here in Chicago, and we've traded above. All of the volume has traded above the prior settlement, which means that 100% of the volume is long. The inventory is long. The range is 18 points. The high of 46.19.5. The point of control of 46.08. And the low at 46.0150. So it tested down into the 4,600 and held that price so far. Here's what we looked at on Friday. Here's our review segment. As part of our review segment, we're looking at what did we look at on Friday. On Friday, the primary scenario was looking for a push into 68.70. Find some resistance. This looked to me like it was weakening. Find some resistance and then squeeze lower. Was expecting 43 on Friday. That did not happen. The secondary scenario is open. Respond back potentially, but really aiming for 80, 84, 90, 97, and 00. Scenario 2 was in play on Friday for part of it. Here's the review segment. Here's what we got on Friday. You could see that the rotations were relatively slow on Friday. We have the entire day, just like we did on Thursday. We have the entire day on one screen, on 1/3 of the screen. But what we did is we pulled back small, and then we had what was a pretty impulsive move up. This rotation right here on Friday represents 17.75 points, well beyond the impulse up. So that's the first surprise. So this is why I don't like to trade in the first 10 to 15 minutes unless something very clear sets up overnight. By the way, the Nasdaq just made new lows. Unless something very clear sets up overnight, really, I need the market on open orders to come in. I need those to set up, to set up the opening swing, and then I need them to then it's easier to see which side of the fight I want to be on. And if we see an impulse up, we want to be on the long side. We want to join the people who are in control, since we're small fish in a big big ocean here. We want to be on the side of the winners. So we're looking for longs. What do we get longs? We get longs at potentially at VWAP, at mids, at and that's full session or RTH. Those can be different, as you can see here. This is the full session VWAP right here. This is the RTH VWAP. Look for market generated levels like the IB, the opening swing, and so on, and then aim for the statistical levels like the overnight high, IB low, and so on and so forth. The day ranges, the volatility sigma levels, stuff like that. So what we ended up doing is we ended up pushing to the 80. That was our first significant area, 80. 84 was next. 84 had a small wiggle right here, but overall we got to the 90. That was the big one. The next one is 97. This is 96.75 here. Remember, 97 was the next key measured move area, new all-time highs. And then beyond there, it's 1600, which was right here, and it poked that into the close. So the map is the path that was drawn on Friday may not have been followed, but the map is the map. And as you can see here, we had a nice little pullback to the IB high for a push. And the way to jump on this is to wait for it to come off and then consolidate and then break to the upside, aiming for 97 and 4600. So that's what we got on Friday. Delta was positive all day long. Delta and price moving in the same direction. And then the other thing we have to take away from Friday is look at this profile. This profile, we see an excess on the low and a multi-distribution profile. This is active price discovery. And what it does is it leaves behind a weaker structure, but the market is clearly seeking higher prices, currently trading at 46.07 as we speak. So let's take a look at what we have done in the overnight session. We opened way up here in the overnight session and then consolidated sideways for the first hour, tested down to almost to Friday's high, which was 46.01, pushed higher, and then we walked down in the Asian session. We walked back down to 46.0150, and then the Europeans came in and squeezed it to the new all-time high overnight of 46.1950, and we have come back. Here's what the Nasdaq looks like. The Nasdaq really kind of did the same thing, but is looking kind of weak. Let's move this down. If you look at this structure in the Nasdaq, it's trading both ways, and you can see that it's trying to find balance. Like the market is doing a good job of working on finding balance. The overnight point of control at 15,875, but then it really makes a run for it right here, up into the 13 quarter, pulls back, pushes the 1475, and then explosively moves down. And this is basically a bearish formation. If you're into patterns, I'm not into patterns, but I do pay attention to the price action and how it has failed. And if you look at how this structure was created, this is a 5-minute chart, by the way, just so you know, a lot of bars. But if you look at the structure here, where's the pullback and retest? There was just no retest here. It breaks down, and it doesn't bother to pull back and retest at least into this, 8150 area or something. This is quite weak. The Nasdaq's coming in quite weak today, in my opinion, and we just need to keep that in mind because the big players are highly represented in the Nasdaq, and therefore we need to pay attention to it. So let's set up. So we went over the week, what to expect for the week. We went over what's happened on Friday versus what we expected. We went over what's happened since the open today. So that sets us off on a course to look at what the bigger picture are. Look at the separation in the monthly VWAP with the close on the ES. There's quite a run here. And the one thing to note here is the fact that the market moves away from that VWAP very quickly. And the reason I use VWAP is because it incorporates price and volume. Okay, it's a lot like a volume profile or a point of control. It incorporates price and volume. We have a lot of separation, and I can tell you that we have a lot of weak structures. And look at the range here, basically 4,400, 4425, which was the key area, the key micro composite volume point of control that we expected the market to test, is where the monthly VWAP ended, and prices ended up way up here. It settled at 45.97, a former measured move. Same thing in the Dow, same thing in the Nasdaq. Very strong separation there. Whereas, for example, for gold, it just kind of came back and got tangled in there. Same with silver. We had some separation in the bonds. They were coming back and end up pulling back off and moving away. The 10-year is separated to the downside, versus the bonds, and so on and so forth. It's not a huge measure. It's not like I'm trading off of it. I'm not trading off of an anchored VWAP or anything like that. But it does show me how how price has moved versus the amount of volume that was executed. So if a lot of volume was traded and price really ground up, you'll have the VWAP moving with the market and really acting like support. It shows that the auction has been quite orderly, but because it's moved away so quickly, what that does is it creates a bit of a vacuum, and we see that same vacuum in our volume profiles. Let's take a look at what's expected for today. Let's turn on our stock zone levels and our master levels and all of this good stuff. It's a new month, folks, a fresh start. And it's looking pretty good to me, to be honest with you, in terms of the types of opportunities that we may get. Here's what we're looking at. For today, is this the right color? I think it is. So what we've done again is we push, pull, push, and we are coming right back. And what we've done is we've gone through the VWAP and the mid. So I want to pay attention here to the fact that we are basically tangled up in this point of control, which has shifted down, the overnight point of control, and we're opening here. I'm looking for an open auction that pulls back slightly, and I'm looking for it to take back this selling that has taken place. We're above the 4,600. I'm expecting it to really continue to squeeze in that direction. Sellers have had a huge opportunity to show up and take some of these prices back and really advertise prices lower, and they've failed to do so. In my opinion, we have all the fuel that we need to continue to push higher. The target is 46.30 is the next measured move. 46.30 up here. We paused overnight at the 46.15, which was also a measured move. And then we have the 06 down here. Again, a measured move target. Why are we using measured moves? Is because we don't have an auction here from the past. This is all new territory, so we're simply projecting targets. These are not, although they've been pretty decent in my opinion, areas to fade the market. Like 90 was a measured move. 97 was a measured move right here from the other day. It pulled all the way back to 80. but I don't use them as a resistance. I use them as targets, because it is new all-time high territory, as I said. So that's the primary scenario. The secondary scenario is an open auction that squeezes up, is unable, and then gives us a flush down to get the overnight low stat right here, and then to come back into 4601, the high of the range on Friday, and then back into 57 before it consolidates and comes back into new all-time high territory above 4600. So new all-time highs, not a fun trade, not much reference. Really, it's about waiting to see what the market does and just playing from that side. That's the goal. The goal is not to impose our will or expectations on the market. The goal is to find out who's in control and to trade from that direction, to form a bias from that direction, and then to trade when the setup shows up, when the market simply says, hey, I'm selling and I can't get lower prices, and I'm pounding and pounding and pounding on the bid. That gives us an opportunity to take that long. It gives us an opportune time to get that long with very, very well-defined risk. I don't have to use 6 points of risk just because the rotation is 6 points. What I can do is lean on market-generated information, the order flow, and so on, once my bias has been formed. So first, you get your context. You look at the history. This is what we're doing in a Trader Bite. You get your context. You lay out your pricing map. You wait to see what the market generates. I'm not a fortune teller. I can't tell what the market is going to do. Yeah, sure, you can guess, and you have a 50-50 chance of getting it right. But once it shows us what the bias is, then we're looking for our individual setups in the direction of the bias. We wait for the market to pull into an area that gives us reasonable risk reward, or an R factor, a reasonable R factor, 2 to 1 hopefully, or better. We wait for it to pull in there, take the trade, put in your orders, put in your stops, and let it do what it's got to do. That's the entire process that we're following here. This is how I've been trading for the last 15 years. I've been trading overall for 21 years. And I used to be a very, very heavy scalper in my first 5 years, first equities and then futures. And this way of trading has not changed for me. I don't need to change indicators, and I adapt over time. But the core of what I just shared is what keeps me here. I strongly recommend you listen to that again in the recording. It's available to you on YouTube as soon as we stop here. This is the entire process we're going through day in, day out. Okay? Good luck.